Alphabet stock has been trading at relatively cheap valuations for several reasons, but most notably because stock market participants are extremely concerned about the impacts of large language models on its search business. I think those risks are being overestimated, and I've been talking about that extensively, and I'll share with you some details as to why I think that's the case here in this video. I'll also share with you one segment of its business that's being underappreciated, right? So you have the risks being overestimated, and you have one segment of the business being underappreciated, and that's the driverless Waymo segment. And I'm going to share with you some details about that. And then I'll share with you the valuation of Alphabet stock and let you know if I still think this is one of the best stocks to buy right now. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so I'll share with you first the underappreciated segment of its business, and I'll talk briefly about that, and I'll spend a lot more time on the search engine business because that, in my opinion, is more important to Alphabet's valuation and more important to Alphabet stock investors. So Waymo continues to scale and expand to safely serve more riders in more places. And I think that's the key here is safely. Waymo uses the LiDAR, radar, and full suite of safety features to make these rides safer, right? Whereas Tesla is going with the cheaper version to make it more scalable, cheaper to produce, and in that way offer customers a lower price per ride. But my estimate for this market is that price is not going to be the selling point. Consumers are not going to look at this when they're choosing a ride and say, I want to look at what's the cheapest option. I think more and more consumers will look to what's the safer option, especially when you're working with families and parents. They're going to want to go with the safer option, not the cheaper option. And so I like the direction that Google is going here or Alphabet is going here with the safer, more full suite of technology embedded in the vehicles to reduce the number of incidents, to reduce the number of tragedies. Of course, you've probably read in the newspapers about how Tesla was held liable for a crash involving one of its cars that was on a robo mode or autopilot mode, and it crashed into people, killing people and injuring others. And so those types of situations will make consumers afraid of going into some of those vehicles. And I think safety is going to be a primary selling point in this market. So last month, Waymo launched in Atlanta. It more than doubled its Austin service territory and expanded its Los Angeles and San Francisco Bay Area territories by approximately 50%. So I'm in the Los Angeles area and I see these Waymos all the time. Almost daily, I see them traveling the streets. And now to see them expanding territories by approximately 50%, it's progress, and it demonstrates that they're collecting significant amounts of data and people are using these services. So the Waymo driver has now autonomously driven over 100 million miles on public roads. 100 million miles on public roads, and this is autonomously driven miles. This is truly autonomously driven miles. I know Tesla likes to boast about how many miles of data that they're collecting, but those are not truly autonomously driven miles. That's with the driver in the driver's seat, but clicking on the full self-driving, supervised self-driving mode while still being in the driver's seat and having to intervene ever so often. This is not that. This is fully autonomous with customers in the back seat, over 100 million miles. And the team is now testing more than 10 cities this year, including New York and Philadelphia. So by the time Tesla brings its robotaxi to market, Alphabet's Waymo and other participants could have already captured a meaningful part of the market, especially the most important parts of the market, which are these large cities that are going to consume most of the market opportunity here. So this, I think, is being underestimated in the marketplace, primarily because Tesla has been so good at marketing. Their In my opinion, their best skill as a company is marketing. And that's kudos to the CEO for being able to market these products before they're even out and getting investors to believe before any real tangible or way ahead of their tangible progress, right? If they make 1 inch of tangible progress, Tesla's CEO is able to sell that as 20 steps ahead in progress. And that's a skill that Tesla has absolutely mastered. And that's creating these types of opportunities for investors where Alphabet is not effectively marketing this as well as Tesla's marketing it. So it's creating an undervalued opportunity for investors. So the biggest risk we can move on to is Google's search engine business. And I'm monitoring this extremely closely because I'm an Alphabet shareholder myself. And this is something that I'm concerned with is how changing consumer behavior, shifting more of their search engine, search results, search questions to large language models, which don't monetize as well. So Google services in the most recent quarter generated $83 billion in revenue, 12% growth driven by strong growth in search, right? So I'm happy to hear this from the company. So one of the reasons for that is Google has been improving their search engine business. They're making it more useful to customers. Google Lens search is one of the fastest growing query types on search, and it grew 70% since the same time last year. 70% growth in this category. So healthy growth for shopping queries using Lens. And you can understand the functionality of this. You're out and about, you're with friends, your friend has a product or you see a product somewhere and you're interested in it and you search it up using a picture and it gives you results based on that. And so that's growing significantly as people are finding it more useful. By the way, this document I'm looking at is Alphabet's second quarter 2025 earnings call transcript. I've made this highlighted document available for my channel members. You go to your membership benefits section and you can see the file with this, as well as dozens of other companies that I've researched and uploaded the highlighted document. So last quarter, they introduced AI Max and Search, which is a new suite of AI-powered features in existing search campaigns. So advertisers that use this type of campaign typically see 14% more conversions. And that's the name of the game. If you're an advertiser and you see better results from your ad spending, you're going to spend more because you're seeing the results, right? If I spend $100 and I get $150 worth of value, right? I get $150 worth of uh, investment, return on investment. I'm going to allocate more dollars to that advertising campaign to see if I can keep generating that kind of return on ad spend, right? And if you're a business owner, you can appreciate that because that allows your business to grow and find new customers for your products. Smart bidding exploration, the biggest update to bidding strategy in a decade, brings better performance to advertisers. These campaigns using smart bidding exploration see a 19% increase in conversions on average. So Alphabet has effectively utilized artificial intelligence to make advertising more effective for marketers. And so even if search engine activity, let's say they're losing market share in search engine activity, the overall size of the pie in search engine activity is increasing or search activity is increasing. And then on top of that, the revenue per search is increasing for Alphabet because they're able to generate a better return on advertising spending for their marketers. Those two factors, I think, are really working in investor favor for Alphabet. And when I go to fiscal.ai to retrieve the forward price to earnings ratio, I can see that Alphabet is trading at a forward PE of 19 and a half. which for a business with this kind of market opportunity, the advertising industry is $1 trillion opportunity, and that's just one of the several segments that Alphabet operates inside. On top of that, when I see the company's profit margins, the customer value proposition, most of its products are free, which is an excellent customer value proposition. I like the overall business, especially at these lower valuations. Of course, risks are elevated, as I talked about. Consumers are spending a lot more of their search activity on large language models, and that remains a risk that needs to be monitored very closely for any sharp deviations. But given even acknowledging that elevated risk, I still like the risk versus reward for Alphabet stock at current valuation. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.